All right, what is going on, Discord and YouTube family, and welcome back to another edition of Top Down Analysis with me, Top. Today is Sunday, October 12th, 2025, year of our Lord. And as per usual, we'll be breaking down 3 months between the S&P 500, Dow Jones, and the NASDAQ 100. But first, let's talk about last week. Last week's prediction. So last week we talked about the fact that we were continuing on the rally. We talked about the fact that the rally was getting weaker, and we talked about the fact that we need some level of volatility in the market. I said, hey, the VIX is consolidating at its level. It's waiting to pop. There needs to be something that gets us up there so that the market can pull back. If it's going to continue higher, it needed to pull back. Well, did I know that Trump was going to send a tweet on Friday? No. Did I know that the market was going to drop 1,200 points? No. Did I know that the S&P, Bitcoin, all that stuff was going to drop? Absolutely not. Nobody ever knows the delivery and how they're going to deliver price. But what we do know is fundamentally we're fucked, and technical analysis is lining up in a sense that hey, a pullback at the very least is necessary in order for structure to continue in a lucrative manner. Well, we got all of that. And in this video, we're going to discuss just what we're looking for going into next week. And I'm not going to overreact. The thumbnail may say that I overreact. The thumbnail may say something like it's Black Monday and you know what, sell everything and crash this and crash that. But it's just to get you in here to potentially listen to something that can actually help you moving forward. That being said, let's get right into the charts. All right, moving over to the S&P 500, I want to give you a broader view. I want you to start looking at the market from the higher time frame so you can understand how these little sell-offs, although they're aggressive, although they, send people in a frenzy, on the higher time frame, they mean absolutely nothing yet, right? They start to, show little divots, but from a higher time frame standpoint, they don't really mean really much. The 3-month candle, we'll start there. There's 2 months and 20 days left in the 3-month candle. And thus far, that little crazy sell-off that we had, the only thing it really did on multiple instruments is it's coming back to the monthly fib of the 3-month candle, right? So the quarterly candle needs to be retested, or it can be taken over. Usually the way we do that is we pull back into 30%, 50%, or 70%. In this situation, we're only pulling back to roughly about 70% so far in the month, right? Or I'm sorry, 50%, or not even 50%, 30% on the month, right? Or on the quarterly candle. So therefore, although that was an aggressive sell-off, if this trend on the 3-month is to continue, this little movement in price pushing back to 30%, it doesn't really mean much in the grand scheme of things. And that's how you're going to hear me speak about the bullish activity, because until the bulls or the bears show me something aggressive, I'm going to be team bull the whole way up. We look over here on the monthly candle, and yeah, the monthly candle is starting to show some level of aggressive selling. However, if we just look at this objectively, you ask yourself, if the monthly candle brings a new high, right, then it's done its job. If it doesn't bring a new low, then it's still bullish. We got 19 days and 4 hours to figure out exactly what the market is going to do with this. But right now, even though we aggressively failed, the only thing the market really did to me is make a new high and then now pulling back into about 70% of the monthly candle. It is noted that we haven't really done this in this trend count except for once, and that was in the month of August. The rest of the months, we didn't even pull back into 30%. But in the grand scheme of things, if we look back at this pullback and the market ends up rallying above here, pushing into 7,000, this is going to be nothing but a small blip in the grand scheme of things. So ultimately, the 3-month candle and the monthly candle, because they haven't made new lows and they originally made new highs, they're still in favor of the bulls. Let's move on down to the weekly candle, which is the one that everybody's looking at and saying, hey, the sky is falling, everything, right? Here's something that you should take into consideration. When you're looking at the fundamentals of the market, you got to ask yourself, why did this candle take place? Was there any new information given to the market? Has the economic situation in the market changed? Has there been some type of disease that came out that the market would say, you know what, we're going the other way? No, nothing changed. The only thing that changed in this was a Trump tweet. All he said was, we're going to put 100% tariffs on China, and the market overreacted, which the market does a lot. You remember the overreaction from July of 2028, the week of July of 2028. Overreacted, bought it back up, overreacted. Will we buy back up? I don't know, but I know that this could be a potential overreaction. However, we have to stay and remain objective. Objectively, the market, if it needed to go semi-bearish, it needed to break through 22nd of September, the week of September 22nd low. It did that successfully. So we have to give the nods to the bears on the weekly time frame. The weekly time frame, however, things that we need to note is that price came right back into the previous all-time high break, which was 6604. Remember, we needed to break above 6600. We did that, and now we got back above there and went all the way to 6800. Now we're coming back down to retest the 6600. If we're going to remain bearish, to me, a bearish movement, for those that are like, you're never bearish, you're always bullish. I'm not a perma bull. I'm a perma be on the right side of price person. That's all I'm trying to do. In order for me to turn bullish, the market has to not break structure, which it's doing here. I want it to change character and then have a retest failure. I'll draw it out for you. This is the scenario where Hobbs turns bearish. On the weekly time frame, the market needs to trade below this level here at 63.7250. And then I want it to come back up and retest either this high, which will put a head and shoulders, or come back up and retest these highs, which will also just be a higher head and shoulder, and then take out this level. At this point, I'm bearish, anticipating a break below here, and then the downtrend continues. Right now, we do not, I repeat, we do not have a change of character. Therefore, we do not have a shift in structure or to the downside until the market fails on the retest. Additionally, let's move on down to the daily time frame, and I'll break down the thesis here on the daily. On the daily, this looks even more atrocious, right? It looks even more scary, and I get it. This is scary, right? Like in a sense of, hey, if you were buying up here, you should be very fearful. But I would never buy up here, so I don't care what it's doing, right? What I'm looking at is objectively, what is the structure telling me? Objectively, we broke through this low, we broke through this low, and now we're back into this range, right? So objectively, I can say that the nod currently is in favor of the bears. However, the bulls have built a major structural support right in this level here. And you'll see when I talk about the actual analysis going into next week, this area here is massive. So if the bears can find themselves breaking below the lows again, back down to like 6238 to 6400, 6300, and yeah, on a retest, then I'm looking to be bearish. I'm still going to continue to follow the structure. I'm just saying from a higher time frame standpoint, the information that we're getting just doesn't make sense for me to go completely bearish on the market just yet. Do I anticipate a huge gap down at the open? Absolutely. Do I anticipate that gap down holding? Not really, right? So we'll see exactly what happens as we work our way down to the 4-hour time frame. Let's bring out our top-down analysis, and I'll break down everything that I'm seeing from the top-down analysis standpoint, and I'll tell you exactly where I'm looking for price to go going into next week. We come down to the 1 hour just because it's just easier to read. You can see we have a previous day high of 68.06. We have a previous day low of 65.40 after dropping almost 300 points on the day. That in itself increases the ADR, the AWR, but it doesn't really show up in my indicators. So what I did was I took the ADR, I multiply it by 5, and I'm using that as my plus or minus going into the week. If that doesn't make sense, I'm sorry, just follow along. 3.62% is what we're looking for, plus or minus. So we have to trade up to come down. We have to trade down to go up. If I'm looking for the market to trade down, I'm looking for a gap down just because we're in checkmate, right? You don't know what that is. The link to the Discord is in the description down below. It's $40 a month. Prices will go up in the future. So if you want to lock in at the $40, I strongly advise you get in now. And again, no pressure. I'm just offering my services to those that might be interested. Let's continue. So drop down, we gap down. I'm looking at 3.92% down to 64.1750. This is the low of our macro range on the daily time frame. And then below that, I'm looking at 3.92% again from the this is from the weekly. So we trade up to the weekly fib, which is this green box here at 66.7625. We trade up to go down to this level, and we're looking at 64.1750. If we gap down and the market respects that gap, so we have a gap and go, then I'm looking for the market to finish off about 3.92%, down to roughly about 63.0325, which, if you remember in the beginning of the video, I talked about that specific level being very important on the market to go bearish. All right. If we're going to be bulls on the week, then you want to see the market trade down to go up, right? So if we're going to trade down to go up, the key levels that we have beneath us is the 3-month monthly fib, which is what I started the video talking about. We have monthly settlement, 1 hour fair value gap, and then our macro low on the daily time frame. So I chose to take it from those two levels. The 1 hour fair value gap at 64.5775, 3.62%, puts us right back to weekly settlement at 67.2225. And then if we trade down into the macro low, right, at 64.1750, now we're looking for a rally back up 3.62%, ending at about 66.76, or roughly the current daily fib and weekly fib level. So those are my thoughts on the S&P 500. Stick around on the video. We'll go through reasons why I have that thesis and ways to support that specific thesis. So let's move over to the NASDAQ. All right. Moving over to the NASDAQ, again, we start with the 3-month chart. I'm not going to go through everything that I went through on the S&P 500. So if you want to hear a more in-depth understanding of what I'm looking at, then switch back over to a chapter before this. You can read the S&P 500. But moving over to the NASDAQ, you see the 3-month chart. Again, everything that I said about the ES is the same. We look at the monthly chart. Again, not given to the bulls until these lows are broken over at 22.76825. We come down to the weekly time frame, and we can see that it is a lot, very, very similar to that of the S&P 500. We're retesting these highs right here. These were previous all-time highs. If they don't hold, then we got a different story on our hands. If they hold, we're going right back up. I can just continue to say that with confidence because the market is bullish. The trend is up, right? So let's move on down to the daily time frame. And this is the candle everybody's going to be looking at. And remember, look at where we are. Like, this is a huge gap in price right here. Probably a new week opening gap or an RTH gap of some sort. This is huge. The fact that we bought up right at the bottom of this wick, this is huge. The fact that this was previous all-time highs and we're getting really close to that, like, the market is setting itself up, if it wants to trap a lot of people, right, with this bear trap. Think about it in this sense, right? And I give this to my Discord all the time. Think about it in this sense. If the market decides to have continuation, it's not going to do it so you can participate in it. It's going to do it in Asia and London. So by the time the New York traders that can trade the options show up, everybody that was short the market and holding continuation to the downside, what happens if the market opens up and it's up here? Everybody down here is in pain. You think the market's going to come back there, or it's going to continue to go higher so it can squeeze these people out of their position? That's the way that I look at the market. And, you know, maybe that helps you, maybe it doesn't. Let's drop down to the 4-hour time frame and let's bring out our top-down analysis level and take a look at how I'm viewing price for the week. All right. We come over here to the top-down analysis for the projections on the NASDAQ, and we can see, again, I've increased the projections to about 5.96% or something like that. It looks like I'm missing one of the weekly projections, but we ain't gonna worry about that. So what I'm looking forward to the downside, if we're gonna trade up to come down, there's two levels that I want to see the market return to. The first level is the weekly fib at 24,776.25, and I want to see us target 5.72% down to the right below monthly settlement, right? Go straight through this 3-hour support, right to monthly settlement. Secondary level is we trade up to the chessboard high at 24,570, and then we trade down about 5.78% into 23,143.25. Now, secondarily, if we're gonna go bullish, I want to see the market trade down to go up. So all these levels could get hit early on in the week, and it would just make me more bullish, right? Because we'd be trading down 5% to get to these levels. So then the target back up is going to be very sustainable because it's kind of like a whipsaw effect or a rubber band effect. So what levels would I be looking for? I'd be looking for 3-hour support and then the macro demand level, or this monthly fib right here. Monthly fib would probably be my next level. So 3-hour support sits at 23,600 or 690. And we're looking at 5.98% going back up to 25,398. And since I didn't measure this other one, I'll do it right here on the fly. From the monthly fib, we'd be looking to go up 5.98%. So we'd be looking at roughly about 25,220 back to the upside. So basically the top of the macro range, right? If we come back up to the top of the macro range, then that's what I'd be looking to end the weekend. So either way it goes, we're currently inside of this huge macro range on the daily, right? So I draw chessboards or levels that just make price make sense to me, right? And right now we're in between these two ranges, between about 25,388 and roughly about 23,980. All right, so those are my levels on the NASDAQ. Again, let's move over to the Dow Jones. All right, moving over to the Dow Jones now. Again, 3-month levels. I won't go over too much. Won't want to beat that with a beat a dead horse on that one. So let's go down to the monthly. Again, there was a ton of selling. I mean, like an absolute ton of selling on the Dow Jones. It was leading the way to the downside. So if it continues, it's the truth teller of the market, in my opinion. So we're gonna see I'm watching specifically what the Dow is going to do first, right? Because if the Dow breaks this level on the monthly, then that's going to make me be even more bearish on the rest of the market. I would like to see the Dow trade into about 43,954 for a nice little reversal pattern back to the upside. But that's neither here nor there. Ultimately, the nod still goes to the bears or to the bulls right now because we did make a new high first, right? Let's come down to the weekly time frame. And again, you can start to see strong selling, but again, don't get distracted by these candles because we've seen this image before and then it just didn't lead to anything but higher prices. All right. Not telling you to always be bullish. What I'm saying is until the market breaks its overall trend, the right direction or the continued direction is going to be to the upside. Right. Right now, we're tapping into a very powerful level. If you remember, I went through this level in the previous chapters for ES and NASDAQ. The ES and NASDAQ were still up here, whereas the Dow Jones is sitting right in that strength, right? Like this is the strength of the market right now. If the market breaks this level, then we got a problem. If it doesn't, hey, we're going right back up, right? So just understand that the people that are in pain are the people that this affects tonight, right? So if the market trades down and keeps going down, then the buyers up here are going to be in pain. But if the market decides to go up, then everybody that was selling the market on Friday and panicking and held those puts, they're going to be in massive pain come Monday morning. So that's the way I'm thinking about it because I feel like that's the most diabolical way price can be delivered, right? So looking at price on the daily time frame, we did break structure. We did not change character. A change of character for me, right, is if the market can break through this initial liquidity, right? And just to illustrate it further on the weekly, it looks easier to read. 45,010. We get below that level, and we're talking. That's a change of character. We break through here. We get through this level. It's definitely game on, right? Because that will break the monthly level. But looking over here on the daily time frame, we first got to get below 44,906 or 45,023. We start breaking through those levels again. I'm having a different conversation next week. But for now, I'm just trying to stay objectively clear on exactly what I'm looking for going into the following week. We go down to the 4-hour time frame and we turn on the top-down analysis for the week. And I can tell you exactly where I'm looking for price to go, right? We come over here and we come down to the 1-hour time frame. I'm looking for a projection of 4.85 to 4.7% plus or minus. To the upside, we want to see price go down first and then come back and finish to the upside. Well, if you've been following my videos for any amount of time and you trade the Dow Jones, you should recognize this level very, very clearly. That level is a key level that we found that the price just continued to magnetize toward. If we were below it, you could continue to stay bearish. If we're above it, you could continue to stay bullish. And well, we're about 1,000 points away from that level now. So 44,777 is also our macro low. So if we tap into this level at 44,777, I'm looking for about a 4.85% increase up to about 46,960. The other level that we have below that is the 1-hour support that sits at roughly about 45,352. I like to see price tap into that level and again travel back up 46,525 to the upside. If we're going to remain bearish, and I want to see the market trade up to come down, and we're looking for a tap into the 1-hour fair value gap at 46,186, targeting 4.7% to the downside at 45,009. You recall from the weekly time frame, the monthly time frame, and the daily time frame, I talked about 44,010 as a very key level to break. It shouldn't surprise you that if price comes down here, we're going to be bearish. From the chessboard low, i.e. we get a gap and go, that level is 45,526. I'm looking for the market to travel down 4.76% into 43,356. All right. So those are my levels on the Dow Jones. Now, what I would like to do is I want to switch over to the VIX and kind of give you an idea of how I'm viewing the VIX so you can understand like this is like my support mechanism for how I view price. So I do have it charted right now. So just ignore some of the levels that you see on here because you might not understand exactly what I'm saying. But what I'm going to do is I want to turn off everything first and I want to talk about the VIX just as a whole. So if you're an ICT trader or you've been around the markets long enough, you know what NWOGs are, right? New week opening gaps, right? These little blue teal lines down here, right, are an indicator that I have that marks out the last three NWOGs. Well, I've been talking about the VIX extensively in my videos because everybody doesn't trade the VIX, and I get that. That's okay. We don't all trade the same. I've been talking about the VIX extensively in my videos, and I've been talking about the fact that it's been consolidating down here for weeks. But once it got back above this NWOG, and then it started holding this NWOG, I alerted the Discord like, hey, the VIX is in between NWOGs right now, and the next move it makes is going to be a big move. Well, we got the big move. We look over here on the 4 hour, and after that tweet came out, all of the people that were accumulating VIX calls down here, they all ate right here. So what am I looking for out of the VIX to remain bearish and basically hold my bearish thesis intact? But what I want to see is we're currently in what I like to call checkmate. Essentially, what this means is that the price should be looking to go higher. It doesn't have to, but it should be looking to go higher. If the VIX can get back above 23,195 and hold, then I'm looking for the VIX to start pushing towards the 26s, and that is going to mean continuation. If the VIX starts to get in the 26s, the 30 time frame, yeah, we're going to get continuation to the downside. However, if the VIX comes up here and fails and doesn't hold the 23s, then I'm afraid that we're going to get a retest of this trend line down here, right? The 9 EMA is down here. The monthly fib is down here. These NWOGs are down here. And if that retest comes in, guess what it's going to do for the market? It's going to give the market the exact juice it needs because it's going to tell us that the buyers are interested at these levels. The market's going to get that juice. The VIX is going to start to dump, and we're going to go right back up, right? I'm not saying that that's exactly what's going to happen. I'm giving you an if-then hypothesis. If the VIX does this, I do this. If the VIX does this, then I'm going to do this. For all the little trolls in the comments, there is no guarantee of anything I say or do. Here's what I do guarantee. I guarantee you this, that if I plan to do something, I'm going to do that something. So if the VIX does this, that's exactly what I plan to do. So those are my levels. Those are my ideas on the volatility index. Let's go over to the news for the week. Now, as you can see up here, again, I'll briefly touch on it because I don't really care what this dude says. Say what you want to say about Trump. This is not a political channel, so I'm not even going to dig into it. All I know is right now, as a presidential figure, he really goes back on his word a lot. And I think that he says things and then walks them back when he realizes that's not really the truth. And the market tends to react to that. So on Friday, if you're unaware, Trump sent out a tweet, said that we were going to put 100% tariffs on China by November 1st if they didn't comply to whatever he wanted them to comply to. Well, 26 minutes ago, as the market's revving up and generating liquidity in crypto side, what did he put out? Oh, don't worry about China. It'll all be fine. Highly respected President Xi just had a misunderstanding, whatever he's saying, right? Ultimately, that's probably going to rally the market because it's just another situation where Trump's not getting it done in regards to the deal and the market's reacting to the information. But then once they realize there's not going to really be anything out of it, they're buying back up. So that's just covering that particular part. On Monday, we don't have any news, so the market can pretty much start to set that range. On Tuesday, we do have Fed Chair Jerome Powell speaking, and this will be red folder news because all eyes will be on whether or not he gives us any glimpse into any negative things that maybe the market's not aware of, or maybe we haven't announced just yet. So you best believe there's going to be some questions coming toward his way. On Wednesday, right, we don't have much news. And again, the news that we do have on this calendar may not happen anyway because the government's still shut down, which I find it crazy. Nobody's really talking about that. But anyway, on Thursday, this news is tentative. We don't even know if we'll see this, but core PPI is scheduled to be coming out. Core retail sales is scheduled to come out. PPI, retail sales, again, everything is scheduled to come out. But if the market shut down or if the government shut down, You're not going to see any of these numbers, which means we're just flying blind, which is another reason why, for anybody that's a bear, I'm with you. Of course, I'm bearish, but as a trader, I'm going with the direction that's winning. The Bulls just keep winning. So that's just where I'm at with it. We go into Friday, and again, we don't have much news going into Friday, but I'll remind you that this week is also bank earnings week. I normally go into Earnings Whisper and I have a picture, but I didn't do that this time. But the banks will start to report this week, and they will start to give us insight on exactly where they stand on the current status of the economy. Banks never really lose on their earnings. So that's not where I'm looking at. I'm not looking to see if they win or they lose, because they're going to win. They're going to beat earnings. The question is, what type of guidance does Wells Fargo has for us? What type of guidance does Bank of America have for us with the current state of the economy? Not the markets, the economy, right? Because they're making money. Never mind. I'll give another lesson about banks another day. But ultimately, I want to watch to see what they're doing, because right around the corner, we're about to go into earnings season, which is why I'm not extremely bearish on this move, because I've just seen it so many times. With 3 weeks left before earnings, the market starts to sell down in preparation to buy the market back up aggressively. So we'll see exactly how it turns out. I'm not predicting anything. I'm simply giving you my levels, and those levels could be interpreted plus or minus. That being said, this is the top-down analysis. My name is T. Hobbs. Thank you for tapping into the Trader Shop, and we'll catch you guys on the next one. Peace.